Hey guys, thanks for coming back today. We're going to be looking at another company that is huge in their space. It is the medical space, one of the biggest in the world, and obviously big in the US. It's going to be UnitedHealth Group. Not sure if the recent news headline about their CEO getting killed is going to quite yet affect some of these projections and numbers that we're going to look at, but just a big company and been in the news a lot, so I wanted to see where they currently stand and if we should buy, sell, or hold. So without further ado, let's get into it.
Cool. So first things first, we are just going to Google the United Healthcare 10K. We're going to pull that up, which we have. So we have the different years, and we are going to look at 2020, 2021, and then 22, 23, and 24. So we have these here, and we have, as always, laid out our spreadsheet the way that they have done theirs. So with revenues, we're going to be looking at premiums, products, services, investment and other income. And then for operating costs, we're going to be looking at medical, operating, cost of products sold, and depreciation and amortization. And then pretty standard under the different operating costs and interest. So just interest expense, loss on sale of subsidiary and subsidiaries held for sale, earnings before income taxes, provision, and net earnings. So we've set up ours the same way. And now let's get into the numbers. Alrighty, so getting into some of the numbers, like I said, we've set up our spreadsheet the same way. I've already populated these on another tab, so I'm just going to get them in here so we can walk through them. Zoom in a little bit as well. So we can basically see with our revenues here steadily increasing over time, so always a good sign from a business standpoint. Operating costs, likewise, are pretty steadily increasing over time, so that's basically going to give us our profit here, which is increasing, nothing too out of the ordinary. We have our um, expenses from interest, and that's going to give us our net earnings down here. So we can basically see that things are pretty steadily increasing until you get to 2024. And so we do have a little bit of a dip there. Looks like that is basically coming from a bit of a lower year in earnings before income taxes. And that does come from this loss on sale of subline, which is only something that showed up in 2024. So that's just something to point out did lead into a bit less net earnings for the year. So not sure exactly what that was, but definitely going to be something that plays a pretty big effect there. Moving down a little bit lower here, we have our net earnings overall and then our operating margin. So you can see these numbers, basically the total revenues or the total operating cost divided by total revenues. So pretty high number there. Gross profit, you can see as a result of that is going to be nothing too crazily high, which of course the operating cost divided by the revenue is going to give us that operating margin, and then the revenues minus costs is going to give us the profit. So you can just see the relation there. Moving down a bit more into the earnings per share, likewise increasing up until 2023, seemed to have a pretty big drop off in 2024. So looks like a trend that's probably going to continue here. That even goes into the shares outstanding. Looks like we bought back a little bit in that year. And then, of course, expenses as a percent of sales. We've already kind of looked at the total operating costs when we're dividing by the sales. Pretty big portion of those costs make up, I shouldn't say make up, but are pretty close to that sales number. So we can continue on with some of the additional costs here. And we can see that medical costs play a pretty big proportion of those revenues, which of course is going to be something we can notice up here as well. 264 out of the total 367. So medical costs obviously make up a pretty big proportion, 66% to be exact in 2024. And then now we can move into some of these numbers down here just to get the changes in working capital. So we did look at depreciation and amortization a little bit up here. it was one of the line items under expenses, but we can just populate that once again. So this is how we're going to see things. So D&A pretty steadily increasing. CapEx also increasing a fair amount. Nothing too crazy, nothing popping out as unusual. Receivables also increasing. Not any inventory as one of the line items here, which I guess does make sense as just their business model. Not really a big inventory company. I think a lot of it, like we can see here, is just premiums, products and services, um, different things like that. So not a company that's going to have inventory on their balance sheet. And then we did have payables broken into two things, which is accounts payable as well as medical costs payable. So you can just see the totals here at the bottom, and that's going to be something that kind of fluctuates up and down. No real rhyme or reason to the trends there, but we can ultimately get those changes in working capital, something that is going to fluctuate from positive to negative. So we can see how that plays out on the next page. Getting into the discounted cash flow on this page here, we're going to take a look at the revenues. This is something that is going to be growing by this 6%, which we have chosen here as the terminal free cash flow growth rate. Basically picked this. I did see some numbers a little bit higher in doing the research on this company. I know it's been increasing pretty well over the past couple of years and even beyond that, but just with some of the things that have happened in the news with the CEO, some uncertainty around that, wanted to pick somewhere in the middle, just based on some projections being higher, some of the negative things in the news. So that's why I landed on that 6%. So we can basically take a look, revenues increasing steadily at that 6%, operating income similarly increasing pretty steadily around that 8% here, with interest expense and income before taxes also increasing for the most part. But we do see a pretty big jump in 2028 here. And obviously that's going to play a big part into the net income, which also jumps up pretty significantly there. And that is basically going to lead us into our free cash flows, which we can take a look at down below here. So we do have a bit of jumping around for these free cash flows, 23 down to 19, down to 17, up to 39. So just some variability there, which we can see is coming from these numbers above, namely the net income, that big jump there. So overall, pretty good free cash flows projecting out into the future, these next 10 years here. Terminal value at that 6 million, obviously a bit different on the scale here, but just how we have it set up. And that is going to give us these numbers for our projected equity value and free cash flow yield. So the net present value of these free cash flows coming in here around the 280,000, and then the net present value of the terminal value, just using this discount rate of 7%. Again, we're just using kind of an industry average for that number. And so as we type in some of these here for the debt, cash, shares outstanding, and current price, we'll be able to get a decision here. And so let's take a look. We're going to type in the debt here. And so that's going to fall 2024 at the 298 278. Cash is going to put us 25 312. Shares outstanding, we can just look this up here. We're going to have around the 9.922 billion. So to make sure we get that scale right, going to type that in, and then of course the current share price, that will put us at 282.25 with an implied share value of around 374, and that will give us a 32% upside. So it does seem to be quite undervalued here with a buy decision. So might actually be a good idea to buy United Healthcare Group. But of course, a lot more factors can go into this. And so there is our analysis.
Cool. What an interesting one today. I really did not know how that one was going to turn out. Obviously, some other factors that can go into a company, and especially this one, just given the things that have happened in the news recently. So thanks for checking it out, and we'll see you next time.